Boop. Okay, awesome. Hey Les, how are you?
I am doing well, thank you. How are you?
Good. Thanks for your patience with all those technical difficulties on Facebook. I thought for some reason it would be as simple as bloop live, and then we would be able to do that. But here we are on Zoom, which is going to work just fine. So
Yeah, I would have thought the same. I have never gone live on Facebook, but have a lot of time with Zoom, so this will work.
yeah, and I know it's so funny because there are so many more people obviously using these virtual platforms to do things like this, but Facebook Live I had never used before, and that was the first. So I'm glad that we could pivot and make a move over here to Zoom to be able to share the information we want to get out today. So just for everybody watching, my name is Tom Wheeler. I'm with Wheeler Group, and I'm joined with Les Ferris with Propel Loans. Les has been in the mortgage business for my lifetime, basically. And he's the best in the game. And Les, tell us a little bit. You just actually started Propel Loans, right? So tell us a little bit about that venture, because that's new for you and exciting.
Yeah, we did. Thank you. I've been in the real estate business for nearly your entire lifetime, as you said, but we've been doing lending for 10 years. When I first started in the business, I started as a mortgage broker and spent the first 5.5 years doing loans that way, and then moved over to retail lending. And I just always felt like having multiple options for customers rather than just one set of underwriting guidelines was best. It took me a while to get the experience and the resources. And in February, we launched Propel Home Loans.
Awesome.
So we're a full service brokerage. Yeah.
Cool. Well, that's super, super exciting. And, you know, the topic of today and the topic of what seems to be everyone talking about, obviously, is COVID-19 and its impact on not only our daily lives, but also our businesses, I mean, our workout routines, our diet, everything's affected by COVID-19. And so I thought it would be really important for us to share with our people an update from both the real estate perspective as well as the mortgage, because obviously those go hand in hand. You know, you and I work together closely to be able to just to go from start to finish with a client. So I wanted to be able to share some updates in the marketplace for our people, so that way they can kind of have a one point of information for these things. And as I'm sure everyone, at least that follows my Facebook business page, Wheeler Group Facebook business page, I made a post with Chris Galler from the Minnesota Realtors. He did a video kind of discussing how realtors in the state of Minnesota were deemed essential. So real estate transactions and services were deemed essential by Governor Tim Walz as of March 25th. And those included appraisers, title services, movers, inspectors, and as of April 13th, photographers. So we know that the real estate market at least is graciously deemed essential. And so here at Wheeler Group, we're taking every precaution we can as it pertains to showings, as it pertains to communication, and utilizing platforms like this to be able to go through a real estate kind of activity, which would be a closing or even a showing, those different things. So tell us a little bit about how the lending world has changed a little bit. I know that there's underwriting changes. I know that that's changing regularly, but what does that look like from the mortgage perspective? We're deemed essential, but how does that affect the mortgage business?
Yeah, that's a great question, Tom. It has changed the mortgage business basically from start to finish. You're seeing a whole different method of gathering documents and of interacting with our customers. We always tried to do in-person meetings whenever possible. And of course, with COVID-19 and shelter in place, we're doing a lot more Zoom meetings, a lot more phone meetings, and secure uploading of documents. But where customers really are impacted would be underwriting changes and then the closing process changes. I'll start with the closing process because I actually think this is a good thing. In recent years, the title companies and the closings on real estate was slowly moving towards being able to do electronic signing. Many companies were resistant to it or were not implementing it. Well, COVID basically slammed the gas pedal down. And so almost every single lender we work with is allowing our customers to sign the bulk of their documents electronically prior to closing. So that not only speeds up the closing process, keeps the social distancing in place, but allows customers to show up and only need to sign, maybe 2 to 5 documents by hand.
Okay.
So that part I'm excited about. Where it's changed a lot recently is in underwriting guidelines and things that lenders are doing prior to funding loans.
Okay.
Because of the unpredictability in the marketplace and because employment was changing so rapidly, so many people were getting furloughed and laid off so quickly. What we saw was an extreme tightening in the market around underwriting guidelines. So while many lenders have started to exclude certain loans from their portfolios or not do certain things, our lenders are still underwriting basically all loans,
Okay.
but they're being much more critical around income. So it's not uncommon for your income to be re-verified 24 or 48 hours before closing to make sure that nothing has changed prior to releasing the funds.
Right, because that's customary. The customary route prior to this situation was that 28 to 48 hours prior to closing, employment was verified, all those things were checked. So what is the difference now after close? Because variability in employment is changing daily. I think being that we're now a month into this, it seems that we've maybe hit a little bit of a consistent approach to that, but how are lenders different or the same in terms of how they're verifying that? And are they verifying that a week after close, months? What does that look like?
Yeah, some of it, most of it is determined by, where your loan is headed, but pretty consistently across the board, lenders are saying that, number one, no document in the file can be over 60 days old. So bank statements, pay stubs, all have to be within a 60-day period.
Okay.
In addition to that, they are going to ask you for the most recent pay stub right before closing, and they're going to perform a verbal verification of employment with an employer 2 to 5 days before closing.
Okay, so that's changed a little bit then in that they're being a little bit more proactive, doing it 5 days prior. Is that correct?
That's correct. The guideline states that it can be anytime 10 days, but 10 days before closing, but lenders have tightened that up on their own to be within 2 to 5 days. And then some lenders have gone to what's called a funding authorization, meaning that they're going to review the documents before they authorize the funding of the closing. And what they're doing there is having the client sign an attestation stating that nothing has changed with their employment.
Okay. So just to kind of summarize that point, which I think is really important and a good way to start this off, is that, the real estate transaction is consistent in that we can still do showings virtually, we can still do FaceTime and such. But in summarizing some of the points you made is that the lender is doing a lot more signing documents electronically, which I think is honestly the future, if that's feasible. I know with the real estate side, we use AuthentiSign, which is a very smooth process of not having to sit down and put pen to paper. And then it sounds like the other update really is that as it pertains to employment, lenders are verifying 5 days prior versus the typical 24, 48 days prior. I want to share a little bit of a stat that I found that shows the percentage change in pending sales from last year. Because obviously all of the hundreds of pending transactions that were on the market had an effect. And I don't know if you had a personal experience with anything. I'm sure you have actually things being affected that are kind of in the pipeline, but I wanted to show this kind of graphic. So I'm going to click the screen share button. And I'm going to go over to this guy here. So this is a report by the Minneapolis Association of Realtors. It's a weekly market update compared to all things 2019, ending the first week of April 4th. So this is a little bit of update in terms of what's being affected compared to last year. And as you can see, there's a 30% decrease in new listings, which is pretty significant. There's a 14% change in pending sales and an 8% decrease in inventory. So, I mean, that's quite a bit compared to 19. And we're in the spring market and we're seeing just obviously drastic changes. How many kind of situations have you run into where I'm going to pull this back here, where you had transactions in the pipeline and something happened? Like, what does that look like? Is that happening often? How are you guys handling that?
Yeah, that's a really good question. It's happening a lot more often than I would like, and it breaks my heart, outside of the real estate transaction, to ever hear that somebody is losing their employment or is having their employment, reduced. Yeah, we've had it happen. Basically, everybody and anybody that was in the service industry, so salons, restaurants, airline. Even I have an airline worker who was pre-approved to shop for a home. And those have all stopped. They've changed. And so, we went back through all of our pre-approvals. We looked at the industry that people were working in, and we reached out to every one of our borrowers. And actually, Tom, I think it's good to bring up, if you're on the listing side of a transaction, right? If you're the listing agent and you're getting offers, because we're still seeing multiple offers, because while, the chart you just showed speaks to a lack in activity in listings. Right. So the buyers that are out in the market are competing, right? So we're seeing multiple offers. As a listing agent, I think it makes a lot of sense to be calling each one of the lenders for the buyers who are pre-approved and find out what industry does that buyer work in.
Right, and see how they're affected. Yeah. Yep. And I mean, that kind of segues into a really great portion of information I'd like to share in regards to kind of a listing side and more of the day-to-day as a realtor side. So as it pertains to all of our listing clients, the North Star MLS had a policy where you could upload a listing as a coming soon, and it would be in kind of the MLS queue for up to 21 days. And you couldn't legally show the property in those 21 days until the listed date. Well, the MLS has actually extended that to 60 days. So for any listing clients that, hey, we don't really necessarily feel super, super comfortable listing right now, we can still upload the documents, have it coming soon for up to 60 days. So right now we know that May 15th, I believe, is the date where the quarantine is scheduled to be kind of come to a conclusion. Of course, we don't know how that's going to necessarily affect the business and how that will really actually play out. But with that extension of time on the coming soon platform, that way we can have listings, on the queue. The buyers can still view the photos. They can still, do their own due diligence and research before scheduling any showing, but at least we can get that on the MLS. The other thing that is kind of happening in terms of showings is they're not allowing overlapping showings. So, when we go out on showings with clients today, it looks a little bit different in that we won't run into other parties. So that can be a bit of a scheduling conflict for properties that are in a hot price point, because like you said, and like I've experienced, the market is still moving. Rates are still, if I understand, relatively attractive, and maybe we can kind of touch on that next. But to kind of solidify my point is showings are not being overlapped. So that means that, like I said, we're not going to run into other buyers. Scheduling can be a little bit more challenging, and that just puts an emphasis on my responsibility to communicate effectively with the client and say, hey, here's what's going on. And that's part of why I want to kind of have this conversation. So just so everyone knows, no overlapping showings. There's an extension to the ShowingTime or the coming soon function on the North Star MLS. So that is from 21 days to 60 days. But tell us a little bit about interest rates. I know that at one point, a couple of weeks ago, I was getting a buyer pre-approved, and it was like changing by the hour. And some lenders were like, not going to do quotes, and some were. How is that looking today?
Yeah, it's a great question. It's stabilized, thank goodness. You really had a kind of a perfect storm. If we rewind to the beginning of March, end of February, beginning of March, before this thing really, the COVID virus really, took off. Investors saw it coming, right? They were looking at the Chinese market and other markets, and they were seeing that this, what was becoming a pandemic, very well could be in the United States or would be, and they were starting to pull their money out of investments in the market and put it more into bonds, and that drove interest rates to really historic lows. And when that happens, it opens a floodgate for refinance applications. And so, you had a supply and demand problem. I mean, you just had way too much demand for refis, and lenders were not expecting it or ready to do it. And so all of a sudden, the end of the first week of March, beginning of the second week, interest rates went from 3% to 4.5%. Some of that's a knee-jerk reaction by the lenders to stop traffic flow. So what lenders will do if they're overwhelmed or if there's something that they see coming is they'll artificially price themselves out of the market to just stop getting any more applications. We saw some of that happening. And then we saw a lot of liquidity issues because the market was going up and down so quickly. Lenders lock these interest rates on lines of credit, and they hedge the money in the marketplace. And so as the market moves and swings up and down rapidly, they can lose millions of dollars on their locks. And that's why the second week of March, you saw lenders completely freeze their lock desks. Lenders said, we're not going to allow you lock loans until the loan is approved, right? We still have some lenders doing that today. So
and that can be pretty huge, right? Because I mean, the goal is to lock when it's obviously as low as it is, but with it changing so much, I mean, that obviously has an effect on the buyer's qualifying power if they're going to lock, if they're not being allowed to lock at their choice of time, but at a different time, and their rate may be something completely different, right?
Right, exactly. I mean, there was a week and a half where it was very uncertain. Most lenders, if not all, were not taking locks. Now we're back to some normalcy where we have lenders that are taking locks right up front, and we have lenders that want you to register the loan with them and get the disclosures out, and then you can lock. So it's much more back to normal.
Okay.
But you're absolutely right. If I'm a buyer, in my mind, and a realtor, in my mind, I want to be thinking about what am I pre-qualified for? What was the interest rate that was used?
Right.
And more now than ever, you just want to be hand in hand with your partners, right? And understanding what's happening. I still think that rates are a little bit artificially high at the lenders. And I think some of that is to still kind of hold off some volume. But we're back to, for somebody with really good credit and a large down payment, interest rates are really good.
Okay. No, that's good. And I like what you said about, I'm looking at the participant screen and it's saying that you were muted. Are you muted?
I've been muting my microphone unless I'm speaking, and then I unmute it so that.
Oh, okay, cool. I was like, oh my gosh, I'm looking over here. I'm like, wait, I wonder. Okay, so you're muted now while I'm speaking. Cool. Okay, cool. Okay, I'm like, oh my gosh.
Otherwise on Zoom, sometimes my microphone picks up you speaking, and then people will hear a weird echo. So
okay. I just want to make sure that we are catching all this amazing information that you're sharing. Okay, so just to like kind of again summarize that. I think that it seems when this first kind of started happening and there was a lot of craziness, not only in the real estate market, but in the world and just everything. Of course, at that point, it seemed like lenders were, not allowing any more quotes and taking these precautions. It seems like now, okay, we've settled into a quarantine. We've settled into, this is just the way things are going to be for a little bit. And honestly, it might be the way things are going forward in a lot of ways in regards to how showings are done, in regards to how signatures are obtained and all those different things. So that's really good information. I think it's important to make the point at the end of the day that if you have a good team behind you, which would be me, the realtor, and you, the lender, and we're on the same page and we're updated and knowledgeable on these pieces, you're going to have the resources you need to make an informed decision. And with that being said, again, rates are still great. There's still movement in the market. And as long as, we're taking the precautions on like a tour perspective, when we go out and we're wearing our masks and we're maintaining 6 feet social distance, and we're not overlapping showings, and we're using our clock swipes, all those things are going to be changes that honestly may have an impact, a lasting impact. But in regards to just straight up the numbers, inventory is still there. Rates are still there, and these are all good things. I wanted to share a little addendum / amendment that was put out by the Association of Realtors, because this is something that I've never seen. So as of March 23rd, the MLS came out with a document that looks like, let's see, this. So it's the Addendum or Amendment to Purchase Agreement Coronavirus Disease of 2019. I just think this is really interesting because whether you're just beginning the process or you're a week from close, this can be of value, and that's why it's an addendum or amendment. So whether you're adding it or changing your current purchase agreement, basically it just says, hey, coronavirus is happening and there are a lot of unforeseen events, delays, cancellations beyond the control of both parties. Basically, this just states that we're gonna work together to get it closed, but we're on the same page that any of these things may pop up that are out of either of our control. So I think that that's a good piece that I'm educating my clients on, whether we're, again, starting the process tomorrow or we've started the process and we're closing next week. I think that this is a piece that is of value. So I wanted to go ahead and share that. Other than that, I mean, I will show one more little piece of just visual data.
Hey, Tom, can I jump in real quick?
Of change in amount of showings that we're seeing. So this is ShowingTime's official website, and it's showing the trend, impact of COVID-19 on real estate showings. This is a calendar week. In the orange, you see the 2020 average, and in the blue, you see the 2019 average. You can see as we're approaching the spring market here, going into April, right? So here it's starting to pick up, maybe the snow, maybe it's getting a little bit warmer, although it seems that the weather in Minneapolis changes like every hour. But you can see here, as we're getting closer and we're progressing through the spring market, 2019 is crazy. It's picking up, and that's what everyone's kind of expecting. But what we're seeing is just this decline. And I think what's important about this information is that as you see, we approach, April 1 through 8, I think it's set in that this is really happening. This is the way it's going, but we're seeing a little bit of change, a little bit of increase as we get closer here. And I think that has to do with people are just accepting the fact that this is how it's going to be. And they're taking, as long as real estate professionals like myself and like our company are taking the necessary precautions to, again, social distance and not do overlapping showings, as long as we're taking those precautions, the buyers that are out in the marketplace are still out buying. And the sellers that are motivated, they're same for them. So I thought that was important to share. Is there anything else that you want to hit? I think we've served quite a bit of juicy content. But is there
just a couple things, just real quick. If it's okay, can I jump
Totally.
in?
Yeah, go ahead.
There's two things I just want to touch on really quick. I want to touch on furloughs and unemployment, and then on forbearance, if that's okay.
Perfect. Yeah, awesome.
Okay. So right now in the mortgage industry, there's a lot of argument and discussion back and forth about unemployment benefits and furlough. And so basically what I'm hearing from my lenders are, if you are furloughed and still receiving your full paycheck from your employer, so they just have said that you're not an essential employee, you need to stay home, there's not work for you to do, but we're going to keep paying you, and they're willing to write a letter stating that they're going to continue to do that, you can still get pre-qualified on that income.
Oh, wow. Okay.
If you're unemployed, right, laid off, and you're getting unemployment benefits, or you're not getting paid by your employer, I don't have a lender or know of a lender that's going to be able to get you qualified until you're back to work.
Right.
Okay? So furloughed versus laid off. The other thing I'd like to just quickly touch on is forbearance, because we've seen, and this plays into that storm I was talking about of interest rates and the volatility in the market. Anybody with a federally backed loan, which is almost everybody, so anybody that has a conventional loan through Fannie Mae, Freddie Mac, or anybody with a government loan, USDA, VA, FHA, the government has put out the CARES bill, which says that the servicing companies, the bank that collects your money, has to allow you forbearance if you've been affected by COVID-19.
Okay.
The thing I need people to understand is what forbearance means. And I'm not saying it's bad and I'm not saying it's good, but forbearance is not forgiveness, and not every servicer lender is allowing you to modify your loan. For example, you might call your servicer and they say, sure, you don't have to make your payment for 6 months. It's forbeared, right? You're in forbearance. Well, that's great, but you need to understand what happens at the end of 6 months, right? Most lenders right now are saying at the end of 6 months, you need to make the entire payment for the whole amount due. Well, if I can't make my payment today, how am I going to make 6 months worth of payments 6 months from now?
Yeah.
Right. So now there are lenders. I heard, I have not independently verified this. Wells Fargo was one of them. Keep in mind, they own 1 in 3 mortgages in our country.
Right. Wow.
That they were playing around with allowing people to modify the loan at the end of the forbearance period. But really the message here is there is relief out there. You should absolutely take advantage of it if you need it, but be very, very clear on what you're doing and knowing the repercussions.
Right. And if there is any sort of gray area, contact your lender. And if they don't give you the answers you need, contact one of us and we'll be able to do that. And that's a really good point because I've been seeing that, there's a lot of forgiveness on credit cards and mortgages and rents. And if you can pay it, right? Because I just feel like there's going to be so many unforeseen, unexpected negative circumstances that could arise from not doing that.
I think that's a great point, Tom. If you can pay it, I think you should. But we also have not heard a clear answer to if you go into forbearance down the road. So let's say you go into forbearance, you don't make 3 months worth of payments, and 9 months from now you want to sell and buy a new house. We're done with COVID, we're out, right? We don't know if the forbearance is going to be considered a default or not.
Okay.
So again, if you need the relief, go for it. We don't want to see you lose your home. We don't want you to, but just know that what the terms are and know that there are some unknowns around forbearance that, there could be unintended consequences.
Right. And I think that's a really, really good point. And again, I think the main takeaway is if there are any questions, reach out to us. That's why we're here. And that's why we're putting this together, is to give information that's accurate, on point, and continue the conversation as to how we can best support the people we're working with now and those that we hope to work with in the future. So just to kind of wrap this up, Les, I'm so glad that you could join me today here in Zoom to kind of go over these things because, I'm seeing so many videos of realtors saying the market's amazing, you should be buying. And although I think that's fair, I think it's also fair that we should share the facts, we should share the updates, we should share the things that are happening, and let our consumers make that choice with the information we provide. Because I don't want to be that realtor that says, it's a great time to buy, but not give you the information that you need to be able to become informed on that decision yourself. So Les, thank you so much for joining me today. I can't wait for us to get together.
No, I know, exactly. Thanks for having me. I have to do one thing by legal and compliance reasons. So yeah. Propel Home Loans NMLS is 1776385 and mine is 853139. And as Tom said, even if I never work with you, if you get a document in the mail, if you have a question, if you're looking at something from your lender and you want me to look at it and try to help you understand it, I'm always happy to do it.
Awesome. And honestly, you're the best. I'm so excited for all the things that we're going to be able to do this year. Again, I look forward to being able to connect once we're out of our little video screens. So thank you so much, Les. We'll chat to you later. Bye.